can't believe the bank approved me for this thing. No idea how I'm gonna pay for it. Well, at least I'm gonna get a tax deduction for it. I'm Adam Boatsman, CPA. I'm the managing partner of one of Charlotte, North Carolina's largest public accounting firms. Over the years, I've helped tens of thousands of business owners just like you save money, make money, and stay out of trouble, and most importantly, have fun while they're doing it. The purpose of this video series is to give you proven techniques to take business deductions and get tax deductions for things that you might have not otherwise thought about. So we're going to answer all your questions and most importantly, show you how to do this stuff without having to worry about the IRS showing up at your doorstep. So if you're tired of taking tax advice from some guy sitting in his mommy's basement, you came to the right location. Even more importantly, I'm also a business owner. So every one of the techniques that I'm going to give to you is something that I've done for myself personally. So with that in mind, let's get started. Getting a tax deduction for a vacation home is one of my favorite questions. I'm gonna walk you through the mechanics of how this works. We'll go with scenario one, which is actually my scenario. In scenario one, you have a vacation home that you also rent to the public. This is the simplest scenario to get a tax deduction from your company for renting the same house, no different than anybody else. So in my scenario, family has a house on Ocean Isle Beach in North Carolina. Here's a pretty picture of it, the VRBO number if you want to rent it. That'd be great. We could use a few more rental days to get this baby to break even. That's pretty simple. You book it on VRBO. I've got the deductions associated with the cost of the house, appreciation on the house, all the stuff that you would kind of expect that would go along with the house. And yes, it's set up in a separate LLC, subject of another video. But how do I get a tax deduction for it against my income outside of just rental income, rental expenses, which are going to become limited at my income level? Meaning, like, if that house doesn't break even and I actually lose money on it, I spent more than I made. And while I don't get a tax deduction for that in the current year because it gets limited, I ultimately will get it when I sell the house, but I don't plan on selling the house. So in that scenario, those extra deductions are worthless for me, and I gotta figure out how to use them. So how do I use them? I rent the house myself. Wait a minute, what do you mean by that? Well, in my scenario, it's actually, real simple. I got several different options available for me renting my own house for myself. Option A, our company actually has an office in Myrtle Beach. That's a no-brainer. Myrtle Beach is 45 minutes away. If I'm visiting the Myrtle Beach office, I just stay in my own house and then charge my company, rent for it, submit an expense report for it, and then get paid back. It's rental income to me, boo, but at the same time, it allows me then to offset that expense that I had that I otherwise wasn't gonna be able to offset. So in other words, if pre me renting the house, I had $50,000 in rental income, $60,000 in expenses, I've got a $10,000 loss, I can't take it because I'm income limited, boo. If instead I charge myself $1,000 of rent for that night, then all of a sudden I've got $51,000, $9,000 loss, yay, and I reduce my income over here by $1,000 in my company. So, great stuff. The second way that I can use it is a strategic planning retreat. Whether I rent out the Ritz-Carlton here in Charlotte for my strategic planning retreat, or I do it in Ocean Isle Beach, doesn't really matter. It's still a legitimate business expense. That's way number two. Way number three is I rent it out to employees. So you guys did a great job, appreciate all the hard work, go stay at our place, we're gonna open it up to you. As long as I'm not exceeding the gift thresholds for that reward, then I can rent the place for myself, rent it to customers, same kind of thing. So lots of different options on how I could rent from my company and get it over into my rental house. And the great thing about this is there's already an established fair market rate. It's what we charge on VRBO. So that's way number one. Way number two, which, this is also a fairly common scenario, is I have a beach place or a mountain house, Adam, and hell no, nobody's sleeping in my bed. I'm not gonna rent it out. How can I still get a tax deduction for it? All is not lost. You have very similar options available here. The first one that exists, I get asked about this a lot of times, is use of the Augusta rule for this house. So the Augusta rule, I don't know how Augusta, Georgia had the greatest lobbying force known to man, but it was a group of homeowners at the Masters that wanted to rent out their place to people that were watching the Masters but didn't want to pay income taxes. So somewhere Somebody said, you know what? You can rent out your house for 14 days without claiming any income. Same sort of scenario. Let's say that I've got $60,000 in operating costs. I don't get to deduct that. So I can't, if I'm using the Augusta rule, I cannot deduct the $60,000. However, what I can do is I can charge $1,000 a day, $14,000, don't have to pay any income on it. So reduce my company income by $14,000, pay myself for the use of my vacation place, do not have to pay taxes on that income over there by using the Augusta rule. That's the simplest way to get a deduction and help offset some of those expenses for something that you were using exclusively. You can go beyond that if you can make a case for it by being the exclusive tenant. You know, if you've got customers in the area, that's a good case. Another office location in the area like we do, that's a good case. You're opening up to staff members to stay there from time to time, that's a pretty good case. In fact, right by my place in Ocean Isle, there's a whole resort that a trucking company bought simply for the use of its employees and ownership. Nobody else goes there but them. You darn right, that's a tax deduction. So hope this helps and enjoy that vacation home, and even more importantly, enjoy getting a tax deduction for it. If you like this video, make sure you hit the like button and that you hit subscribe. If you've got further questions, go ahead and post them in the comments below and we'll do our best to get back to them. If you're looking for more information, make sure you check out our website, subscribe to our blog, subscribe to our newsletter, which are also included in the links below. We hope this was really helpful to you, and have a good time.